Hello and welcome to another daily Forex market review. My name is Schimming, and this review is for Friday, February the 8th. Now I'm going to pick up today where I left off yesterday, and as always, both as a trader and an educator, I start by utilizing my currency strength index. As you know, this tool is used to disassemble the currency pairs, looking at and isolating the major currencies and showing you their strength and or weakness against the other currencies in the field. This is going to allow us to know which pairs or which currencies we should be focused on in any given trading session or trading day. Now this chart is looking back at rollover from Thursday at 5 p.m. Eastern, and even though the market does start slow at that time of day, as we get into the Asian time frame and then ultimately London and New York opens, you can start to see a few standouts and things to recognize in the pairs then that we would be focusing on. You can see right out of the gate the New Zealand dollar here in gray actually made a nice little move coming into the session, but that's not very much movement when it comes to it. It's the yen to the upside that should really stand out and grab your attention. The light blue line that at the tail end of the Asian session and going into London was already making a great move to the upside. By far the strongest single currency in the market today has been the yen. Now this of course is Friday, so you look at the tail end and you can see most of the currencies have gone fairly flat. We're getting closer and closer to the open, and the volume and transactional activity is greatly diminished. That's not my concern. My concern was looking as the traders sat down for London and traders sat down for New York, where's the action? And it's the yen opposing the world. So what is my best pairing? What do I need to put with that yen in order to take some trades? Now we don't trade the dollar yen, although the dollar yen as of late has been justifying those who do trade it. It is the most correlated pair in the marketplace with very little trading range, and quite frankly, in my humble opinion, responsible for more traders not being in the market anymore than just about any other pair. The pairs that we would consider, what becomes attractive, is going to be the yen to the downside, the euro to the downside in red, the Swiss to the downside in white, and the CAD to the downside in yellow, all of which were trades that were executed today. Remember, as a trader, your job is to put yourself in a situation where the currencies of the pair you're trading are moving in opposite directions. You need one moving to the upside and one moving to the downside. You're seeking to avoid situations where both currencies are moving in the same direction. Hence the reason the dollar yen is usually a very dangerous pair, because 90% of the time the dollar and the yen are moving in the same direction. You also see that today with the pound. Even though the pound here in pink started in moving down and had divergence with the yen, you can also see that as it approached the New York time frame, the pound got strength. So I'm not trading pound yen during the New York market today because the pound is moving higher and the yen is moving higher, making it very dangerous. And if you look at the chart from the New York open on, you'll see fairly sloppy view of that pair. The ideal situation is looking at the CAD yen, the Swiss yen, and the euro yen. And since the euro yen has given some extremely clear and great entry opportunities, and because of its average daily trading range now over the last 5 days is averaging about 240 pips per day, the greatest we've seen in over a year, the euro yen becomes the standout pair. So let's look at that a little bit more in a little bit more detail, and this is where we pick up from yesterday, because this is looking at a very similar chart view, although I'm identifying a couple of different things that I'd like to point out today. So going back till this is looking at early September up to today. And so at the very bottom left here in the box, I've noted, now this is a transitional point in the pair. This is when the euro yen, after already being on a very strong move to the upside, came to the 100 level, the 100 figure. That's a big round number. And mentally, we get into a transitional point because there's traders that said, oh no, that's too much. That's too much. Psychologically, that's a big figure. And so traders at that point are looking at saying, it's been moving up unabated for 3 months. We're now at the $100 figure. That's too much. This has got to be coming down, and you start seeing these wild swings in price. Big drawdowns, consolidations at the top, consolidations at the bottom, but this is a massive transitional period. This box represents over 400 pips from high to low. So is it a tradable event? Absolutely. Is it directional? Absolutely not. Is it tricky? Definitely. Transitional phases, as I keep explaining to you and repeating, is where you have a collision of buyers and sellers, well beyond a consolidation. But it does create an opportunity, and you can see in this window, you can see that not only did it set a support level from the 100, look, broke over 100, came back to test it, moved off, came back to test it, moved up and set a new high, and then pulled back and tried to approach that 100 level once again, but was not able to get all the way back down there. As a matter of fact, from a long-term trend standpoint, it came back to the trend line. Then it made a move out of this transitional phase. And so we look at and if we start to compare this to consolidations usually aren't that wild of swings in price. Thank goodness. Consolidations are like what we see right here, coming out of that field and just above, right in this range. That's a consolidation. I've noted a large consolidative period when we were in December, when the market really lacked direction or power just because we are at the holiday going into the new year. This is a consolidation. What you'll notice in every consolidation period, typically the longer something consolidates, the bigger the price is coming out of that consolidative period. Consolidations in the trend that resume trend are very attractive. Consolidations that end trends are also very attractive. The consolidative period itself, just like a transition, is a collision of buyers and sellers and does become tricky. So when you see your pair consolidating, some of you are very upset when the pair is consolidating, hate range-bound trading. Others thrive on it. The more scalping mentality will thrive on it. Either way, it's telling you that there's something great going to happen typically to come from that. Keep in mind and remember, pairs can't go up forever and they can't go down forever, and thank goodness they can't go sideways forever either. So when we're moving to the sideways, instead of being upset or only thinking that you can be a scalper, knowing that at some point it ends, and when it comes out of that consolidative period, is some of the best trades you'll find. It's not trying to pick tops or bottoms. It's allowing the market and allowing the pair to do what it's going to do, you anticipating and being prepared to take advantage of the price action that comes from it. When we get up in this range, now this becomes another huge transitional period in the pair. This is actually where people like myself look at this and say, this really is getting pretty high. This really is running out of some oxygen. Don't think it's done moving necessarily. I'm just saying it doesn't mean it's coming down or has to go up or has to come down, but it's getting pretty lofty and running out of air. At this point, a pullback would be healthy. This has been it at this junction in mid to late January. It's been on a 6-month run to the upside. It can't go up forever is what guys like me start thinking. But that doesn't mean we're going to blindly short it. So here again, you get these massive swings in price. You get days where we're moving up, days where we're moving down, days where we're consolidating. Back up, back down, and consolidating. As a matter of fact, if you review my class on the 7 market events, when you're in a transitional phase, you can usually identify all 7 of the market events. There's only 7 things that can happen in the market. If you want me to teach it to you, I will, because learning how to accurately know and identify the 7 market events and where you are on any pair on any given day in the hierarchy of the 7 market events will in fact make you a much more savvy trader. So as we sit here and cycle this 116 to just over about 121 range, pair's getting toppy. Doesn't mean it's going to stop going up, but it's getting toppy. As a matter of fact, it's still setting higher lows. And while it's doing this transitional phase, what does it do? It comes over and once again renews the trend line, comes and kisses off the trend line. Had it broken below the trend line, you would have looked for and anticipated a short. Since the trend line held and it's a slightly higher low, basically a 1, 2, 3 pattern up here, then it gives itself the opportunity to continue to the upside. What are we looking for? It's got to take out the highs. It's got to set a new high. What did it do? It did exactly that. It moved over the 120 range. It did a brief consolidation when it gets out of there, if I can get my cursor on here. It does a brief consolidation when it gets out of that transitional phase and resumes its uptrend. But this is also becomes a very important situation, because right here is where it all started and where we began to see the 124 level. Some of us were shocked that it could get there, but the 124 level, all of a sudden, this is the first time that 124 said, I'm going to cause a problem for you in the future. Because you can see right here, that was its first indication that 124 meant something, and it produced some resistance right up there. Now let's zoom in on this chart a little bit. I'll bring this forward as I talk, and we really get to what we were talking about yesterday. You'll see the two horizontal lines are marking the 124 range and the 126 range. Not quite to them, but trying to hit on the support and resistance that are in those areas. Now, what has happened today? We talked about it going up to the 127.70, pulling down. This is this substantial 1-2-3 pattern at the top. You can see the consolidation. It has run out of air. I suggested that yesterday because it was below the 126. 124 and the 126 figure are producing the most support and resistance that we've seen on this pair in recent weeks, since the new year at least. And as it came below 126 yesterday, this was substantial. It pulled back to it after setting a 1-2-3 pattern with divergence. That's critical. It came down to 126. It fought with it for a little bit. I mean, this pair has tested off of 126 both from a support and resistance aspect multiple times. Review the video from yesterday. I show those in a little bit greater clarity, breaking that down on a more detailed study. But today, as it broke below 124, came back, or 126, came back and tested it. And if you remember yesterday's class, I said, what it does from here becomes critical. Back over 126, approaching 127, this thing still has legs. Unbelievably so, but it still has legs, and you've got to look at the long. If it can't get back over 126, then it's probably, ideally, I said yesterday, I hope we see 124. I'll trade it short to 124 if that's what it will provide. And what has it done for us today? Not only has it broken its long-term trend line, it's now testing that long-term trend line from the underside. What was a trend line of support is now a line of resistance. We've come down to 124. As a matter of fact, we broke below 124. We came in the mid 123 range. That's over 400 pips from the high set just 2 days ago. So if you are looking for, wanting, or needing a pullback in the pair, you got it. And what it does from here is going to be very, very interesting to note. How it handles 124 is going to be the same and have the same benefit of how it handled 126. We've already been below the 124 level today. That becomes critical. It's already violated it. And if you look at the current price in the bottom left-hand corner, right now as I'm speaking, it is at 124. The bid is just a couple of pip and a half below at 98.5 is where the current bid price is on this pair. So 124 is not only in play, it's vulnerable. Now, as a trader, I don't care whether it gets below 124 and goes down, or stays above 124 and goes back up. I don't care. I just want it to move. However, I can tell you, after moving for 6 months, based on the technical setup, based on this massive consolidation that's up here of all the price and the lack of its lack of ability to get over, what I'm showing you in that red circle does strongly suggest and has me anticipating that 124 will collapse. We will see it come down, and I hope that it does. Because there's stops about major stoppage. They're not counting pivots, not counting every figure, not counting other things that are going to create support and resistance, but major areas based on prior price, support and resistance levels about every 200 pips. It gives you and I as traders a fantastic opportunity to benefit from the euro yen's activity. Again, It can go up, we can have the same great opportunities, but I think down provides a little bit better opportunity. It makes a little bit more sense, and based on the divergence, I think it does become the most desirable thing that this pair could do. So that's what I want to see. And if we blow this up, I'm going to expand it just a little bit more so you can see this a little bit clearer. I mean, this is the longest period that this thing has had this type of motion in the past 6 months. This is really a great opportunity. Unlike those transitional periods that were still setting higher lows, this is a transitional period that's not setting higher lows, breaking trend, putting in hot tops. This is really a substantial situation. Let me show it to you another way. Let's look at it as a going to a different chart, a consolidated view on a 3-line break chart. Get this one out of the way. And I think you can see that a little bit clearer. This is going back to the same period, but this is using our trend and exit tool. So really to clean up and just get rid of all the little noise and all the little extra pieces in the chart, just looking at the substantial sections, the little drawbacks, pullbacks, and rallies into the marketplace, you see a lot of green activity. You can see the runs overall have been moving to the upside. Look at each leg, how much green you see. After every one of these little pullbacks in the consolidative spots, you see a lot of sustained green moving to the upside, moving to the upside. Very little red drawback, although this is where we got in that lofty range, and we do get a little of that. Look what we're doing now. And I think this view should be able to show you, just with a snapshot, say, yeah, I do start to see this. I can see this is getting toppy. I do see that it would be desirable to it fall to the downside. And then you can start to see where stopping points may be. 120, 118, 116, and so on and so forth. Now, not to say I'm not calling for the pair to go to 116. I'm just saying there are some nice big chunks of space in between the more significant support levels that I plan to take advantage of. You can too. You won't just send us an email and come onto our trade floor and trade with us and learn how to utilize pure price technology and how to become a better, more consistent trader. I introduced range bar charting to the Forex industry, and clearly I am the leader in the field of not only trading with it, but teaching others how to do it. And I can show you. Send me an email, DerekSchimming@gmail.com. That's my personal email. It's right here on the YouTube page, and we'll send you an invite and let you spend a few days with us and come in for the next week or so and watch how we attack this pair. Watch how we take advantage of these technical levels and the information that I'm sharing with you, and watch how we and why we are the consistent traders we are. DerekSchimming@gmail.com. I look forward to seeing your email. My name is Derek Schimming. I hope you find this review beneficial, and I look forward to trading with you. You guys, have a great day trading.